So during the bear market, we see people getting 5x, 10x, and even 100x returns from crypto, stocks, options, and much more. But right now, we are kind of in the bear market, and such gains are very hard to come by, and even if it does, it's highly unlikely that many of us will have caught it.
Highly unlikely, mommy.
And like I mentioned in the previous video, I'm switching up some of my strategy in terms of investing to focus a little bit more on dividends, because in a bear market, dividend plays or dividend investing can still provide a pretty good source of cash flow, which then gives you additional firepower to do what you need to do. So before we dive into getting rich with dividends, there are different types of dividends which can affect how much you get paid by your favorite companies. And there are two main types of dividends that companies distribute, which are cash dividends and scrip dividends. And more often than not, cash dividends are the more common form of dividend that you might receive. And like the name goes, it will be distributed as a cash dividend in a form of cash. So for example, if you've invested in STI ETF or ES3, you will be looking to get something like 3.26% or roughly 6 cents every 6 months or 12 cents annually. And for Singapore stocks, we are not taxed because there is no capital gain taxes in Singapore.
No tax? Awesome.
But if you're holding US stocks or ETF which pays a dividend, then there will be a tax of 37% on your dividend, which is one of the downsides that we'll talk about later on. So the other type of dividend is scrip dividend. So in this case, the company will offer stocks instead of cash as a dividend, and usually the stocks that will be offered a lower price to entice customers to pick up the stock option instead of the cash. And companies do this for a very good reason. So this might seem a little bit counterintuitive for offering stocks at a lower price, but companies do this to encourage shareholders to hold on to their stocks and to invest with the company in the long term, and in some way become more invested in the business. So the second benefit of a company offering scrip dividend is to conserve cash flow, because if cash was given out as a dividend, the money flows out of the business and it goes elsewhere. But if scrip dividend was given instead, the money stays in the ecosystem of the company, if that makes sense to you. So with dividend season coming very soon, you got to be thinking if I should start investing in dividend stocks, or what are the pros and cons in dividend stock. So the biggest benefit of dividend investing is getting monthly, quarterly, or biannual dividends, which provides you free cash flow. And like we talked about earlier, if you're investing in Singapore stocks or ETFs, there are no taxes on the dividends that you collect. On the flip side, there are some cons to look out for as well. So while companies may be paying dividends right now, this doesn't mean that they might do so in the future, as companies that do not churn out enough profits might do dividend cuts to conserve cash flow to keep the business afloat. And to build a strong dividend income stream, you will require a huge sum of money as well. So for example, if you want a dividend income of $500 a month, this means that you will roughly get $6,000 a year. And with a dividend rate of roughly like 3%, this would mean you need around $200,000 to reach that $500 a month, which is a really huge sum of money.
Huge.
And lastly, with dividend stocks, we do not get to see astronomical growth. So if you're into that 20-30% kind of gains or 50% gains overnight, then maybe dividend investing might not be something for you. So although it might seem that the only way to get rich with dividend investing is to be rich in the beginning, because with larger capital, it gives you more money to churn more dividends, which will end up giving you more cash flow, and the cycle kind of repeats itself. But always understand that with dividend investing, it's about keeping it consistent and consistently investing and reinvesting those dividends to grow your pile of stocks, which can one day give you a larger dividend income.
Consistency!
So if you're looking to start investing in dividend stocks, here are some brokers that I'm using right now. And no, this is not a sponsored video, so if you guys don't want to use the link in the description down below, it's fine as well. The first one to look at is SyfeTrade. So SyfeTrade gives you 2 trades a month for free, and it gives you fractional shares as well. So as a small account or as a beginner, you can easily reinvest all your dividends that you have gotten every month, every quarter, or every year, and then you use it to buy shares again, which kind of gives you more dividends, and it kind of is like a money loop. And there's another group of platforms like TigerBrokers or Moomoo that charges no fee for trades, and they offer you other investment instruments as well, like options, funds, and all that good stuff. But this could be something that you might want to try if you're a little bit more experienced, because all that other instruments can bring on a little bit more risk. Alternatively, there are also robo-advisors that sort of does the reinvesting for you, but all those do come with a fee. So if you can kind of DIY your investments, this will save you quite a bit of fees. But if you're busy with not much time, then maybe robo-advisors could be something to consider. So at the end of the day, whether or not you pick dividend investing, I personally feel it's a great option to have in your own personal portfolio. But as usual, before you start investing in all these instruments, please do your own research and do not take my word for it, because my lifestyle, my experiences are very, very different from yours. And this brings us to the end of today's video. Do drop us a like, subscribe if you haven't, and as always, stay safe, invest safe, and I'll see you in the next one.